Hi everyone, this is attorney Maria Baler from the law firm of Samuel, Sayward & Baler, located in Dedham, Massachusetts, where we focus our practice in the areas of estate planning, elder law, and estate and trust administration. Welcome to this week's edition of Smart Counsel for Lunch. This week I'd like to talk to you about trust funding. Trust funding is a process that occurs after someone creates a trust document, whether it's revocable or irrevocable. And it refers to the process of either transferring assets into the name of the trust currently or naming the trust as beneficiary of an asset, for example, to make sure the trust will receive that asset at a point in time in the future when someone passes away, for example. How do you know what assets to fund your trust with, or how to go about it? Well, if we prepare a trust document for you, we will prepare trust funding recommendations for you that outline precisely what we want you to do with every asset that you own, whether we want you to transfer that asset into the name of the trust, or name the trust as beneficiary of the asset, or do something else, maybe not related to the trust with that particular asset. And we'll also give you a task list that gives you a step-by-step checklist of what you need to do as to each particular asset that you own. If you have a trust that was prepared by another attorney who may or may not have given you those specific instructions, any estate planning attorney can also help you to create trust funding recommendations for that trust, or to look at how your assets are currently titled, or how beneficiaries are currently designated, and help you decide whether you need to do anything else to fund the trust appropriately. Now, why is trust funding such a big deal? Why do we talk about it? Why do we give you specific instructions, and why do we urge you to get it done? We fund a trust really for three reasons. The first reason is to avoid probate with assets. Assets like real estate or bank accounts, in many instances, don't have beneficiaries named on those assets, nor should they necessarily. And for those types of assets, we usually recommend that you retitle those assets into the name of your trust, particularly if you have a revocable trust. What that means is that instead of you owning the asset individually, your trust will own the asset. If it's a revocable trust, you're likely the trustee of that trust and also the beneficiary of the trust during your lifetime. So titling the asset into the name of the trust won't change your rights to that asset. You can still use it, you can buy it, you can sell it, you can transfer it, you can spend the money that's in the account owned by the trust as long as you live without any restrictions. But because that asset is owned by the trust, when you pass away, because the trust continues in existence, whoever you've named in the trust as successor trustee will have the immediate ability to take control of that asset, manage it, and distribute it for the benefit of the beneficiaries that you've named in the trust document after your death. Otherwise, if the asset is just in your individual name when you pass away and not in the name of your trust, the probate court needs to get involved through the probate process to appoint a personal representative of your estate and to give that person the authority to then transfer title to that asset under the terms of your will, probably into the trust anyway. So funding your trust before you die is an easy way to avoid the probate process and let your successor trustee take control of assets more quickly and be able to distribute them more quickly, or sell real estate, or do whatever needs to be done. The other second reason we fund trusts is to make sure that all assets are going to be distributed consistent with your distribution plan according to the estate plan. Your trust typically will have very detailed instructions in it about how your assets should be distributed at your death, and we want things to be distributed consistent with that plan. If you have a trust that has those instructions in it, but you don't have any assets that are actually owned by the trust or flowing into the trust at your death, then that distribution plan will be not able to be accomplished. So we want to make sure that everything is going to be distributed consistently under the terms of your document according to the instructions you've given us. Finally, if you're doing tax planning, it's very important to fund your trusts. If you're doing tax planning as a married couple, typically you'll have 2 trusts, one for each spouse, and we want a certain amount of assets. In Massachusetts, generally $1 million of assets to fund the trust belonging to each spouse. That's because that's the amount of assets that can be sheltered in the trust of the first spouse to die for the benefit of the surviving spouse in such a way that those assets won't be subject to estate tax at the surviving spouse's death. And if we fund each spouse's trust with $1 million of assets or less, regardless of which spouse dies first, we know we'll achieve the same estate tax savings. And that's, if we don't know who's going to die first, that's a good place to be, because no matter what happens in the future, we'll achieve the tax savings we're trying to achieve by this plan. So in that scenario, it's very important to fund the trust appropriately and with the amount of money that we want to make sure we achieve the maximum estate tax savings. Now, some assets are not used to fund trusts typically. That would include IRA accounts, for example, personal property, and maybe some other unique assets you have. So it's really important to get advice from an estate planning attorney before you fund your trusts. But once you have that advice and once you have those instructions, it's important to be diligent in carrying them out to make sure your trusts are funded in a timely way so that if anything were to happen, you'll avoid probate, your assets will be distributed the way you want them to, and you'll save the maximum amount of estate tax if you have tax planning as part of your plan. If you have questions about funding your trusts, if we can provide you with trust funding instructions if you don't have them, or if you acquire new assets and just have questions about whether they should be titled in the name of your trust or not, we're happy to help. Give us a call. You can reach us by phone, by email, or by visiting our website, ssbllc.com. Thanks for watching. Look forward to seeing you soon. Bye-bye.